Cheers guys, glad to be back to you after this long vacation. I really missed you and hope this is mutual. Although single here, I'm not alone. Today, starring together with me in this new episode of Elish Crypto Weekly Analytics, straight from the South Africa, summerish Catherine. Catherine, hello, how are you doing?
Hi Andrew, hi everyone. I'm in Africa and all is very fine.
Thanks Catherine for your most supportive comment. So today we are going to overlook the behavior of cryptocurrencies in a contagious market, so to say. Also we will find the way how Forex and commodities market react on recent tectonic moves, and of course we'll cover the events of economic calendar for next week. So let's go. Speaking of Forex, this was really a hot week. On March the 3rd, the Federal Reserve announced an emergency cut of the whole 50 basic points of its interest rate in order to protect the economy from what it called the evolving risk of the coronavirus outbreak. The fundamentals of the US economy remain strong, the Fed said. However, the coronavirus poses evolving risk to economic activity. What matters here is not what is said and not the cut itself, but the fact that it was done in emergency long before the scheduled meeting in mid-March. It's the first time the Fed had cut rates outside its normal schedule of policy meetings since the financial crisis of 2009. Moreover, the pre-announcement was made on Friday, and now the market rumors with almost 100% certainty that another cut of 25 basic points and another one in the late March are going to happen, both on the scheduled meeting and later, in the very end of March. No one knows what will happen. In fact, of course, perhaps even Mr. Powell doesn't. But this all send the Euro-USD rate to the moon from 1.11 to 1.12, since all running into Euro, which suddenly has become a safe bay for investors. Massive drop of US indices followed, and well, although the market is volatile and time of uncertainties boost, at least one recommendation we do have: do not buy USD in short term so far, at least till the end of March. As for the commodities markets, the whole world was looking on oil and OPEC. The world was expecting OPEC to be the hero again and cut supplies of oil for the coming month in order to beat the strong drop of oil prices due to coronavirus outbreak. Well, this optimism has sent oil prices up 4% on Monday and Tuesday afternoon to 53.7 USD per Brent barrel. Earlier, the OPEC and allies have agreed in a meeting in December to a collective cut of output of 1.7 million barrels per day due to the dropping demand for oil prices due to coronavirus until the end of March. However, a need for a new cut has arisen, and the news feed around the event was really thrilling, as a detective story offering all possible options of who is an ally with him and who is the enemy with him, and so on and so forth. So this all ended like most analytics expected. There is no still solidity in the organization like you could have seen. So every great player is trying to play for his own, and all this doesn't really help oil prices at all. So the reaction of oil was already a painful slope to 51 USD per Brent barrel, where it is almost hiding now and even lower. So, well, quite as many expected. So there is still need to be more unity in OPEC than it is now. And meanwhile, in Libya, there is again an outburst of warfare. and this causes the drop of oil supplies from Libya. So, economic calendar. On Sunday, March 8, please pay attention to Japanese GDP for quarter and for year to year. Monday, March 9th, German monthly industrial production and trade balance. Tuesday, March 10th, GDP in European Union for quarter and for year again. And Thursday, March 12th, European Central Bank decides the change in interest rate, if any. So far, the low, even negative interest rate helped to attract capitals to Europe, comparing to United States, where Trump still fights the Fed for further cuts of the rate. So we'll see what next week brings. So see you next Friday. Thanks for watching us. Bye.